Good morning, everyone. Brian Hoops here with Midwest Market Solutions. This is our Market Insider TV opening commentary on Wednesday, April the 2nd. Good morning, and thanks for joining us. Hope your day is off to a good start. I'll be doing RFD TV this morning as well as Thursday and Friday mornings of this week, talking about the markets and tariffs and everywhere else our conversation wants to take us. Of course, that's the big thing on everybody's mind here is it's National Liberation Day, according to President Trump. And it also means that the White House is looking at significant tariffs. And that goes into place today with some automobile tariffs following up on April the 3rd tomorrow. We have full newsletter right up in our newsletter. If you don't subscribe to the newsletter, you can do so. Just go to our website, sign up to receive either free trial or sign up directly to receive the newsletter. And we'll get you set up to start receiving information from us. So pretty simple way to do it, and don't need a credit card or anything to sign up at this point in time. You can also follow us on Twitter, Midwest Markets, and Brian Hoops for latest information. Sign up for our text service. Just fill out the form there, get your cell phone information, get text set up, and we'll text you market information as it develops throughout the day. Dollar index a little bit softer here this morning. Crude oil down from its recent highs as well. Stock market pulling back here ahead of these tariffs. And we've talked about this the last 3 weeks, when the bottom is going to come into the stock market. We think we've had it charted already, and this is a little bit of a correction. But we think the bottom is in, and we explain why in our TV segments in the closing basis at the nighttime. Corn down 6 1/4, Deese down 3 1/2, May beans down 4 3/4, November down 2 1/4, meal off, while the bean oil is steady to just fractionally higher this morning. And the wheat's mixed. Look at this. We talked about why we would see Kansas City gain against Chicago. Kansas City's up 1, Chicago's down 6 1/2, and we'll talk more about why that's going to happen and why it is happening and what we can expect here going forward in just a second. So tune with us here as we talk markets. We'll get into our presentation. So, all right. So, out of our offices, 5 offices around the Midwest, be happy to talk markets with you and help you service you. If you need a brokerage account, contact any of us today. You can go to our website and just click on one of the offices or a broker and sign up online today to get your account open. So forecast-wise, winter corn areas of Brazil, going to see decent rainfall this week, but then below normal rainfall pattern sets in. Better rains forecast for Iowa, Minnesota this week, and they're getting some rains last night and this morning. And the winter wheat plains areas are expected to see better rainfall. Now, Nebraska and northern Kansas will see only limited rains. Southern Kansas, Oklahoma, Texas, Missouri will receive really good rainfall. But the rain disparity is significant here. This limited rain in parts of Nebraska and northern Kansas will hurt or at least not improve the hard red winter wheat crop. But we're going to see heavy rains in parts of Illinois, Indiana, Ohio, and Missouri, where the soft red wheat is grown. And that's why we're seeing pressure against the Chicago markets, Kansas City gaining against Chicago off of this forecast. The USDA reported U.S. Census crush numbers yesterday. Soybean crush 189 million bushels. That was in line with the expectations, but well below last month's numbers and 2.3% below last February's crush. Soybean oil production, 2.239 billion pounds. That was down slightly from last month, but up a little bit from, or down a little bit from a year ago levels. And the year-to-date production is now 6.2% larger than last year. The EPA is considering significant increase in biomass diesel blending mandates, with oil and biofuel groups pushing for a huge increase from 3.35 billion gallons up to 5.5 or 5.75 billion gallons. That would be a significant increase. That's why we've seen bean oil take off and rally off of this proposed new mandate. In the cattle market, option expiration for April live cattle contracts is Friday. And then first notice day against April live cattle futures is Monday, April the 7th. We saw a nice reversal rally type action yesterday as cutout values were sharply higher at midday and by the closing bell. Those improved cutout values really helped the packer margins out. They're only about $60 a head negative now. They were over 120 yesterday. Big jump in the cutouts should suggest we're going to have higher cash rate. We've been calling for steady to higher all this week, anticipating with the big improvement in the cutouts that will help out our cash markets. Iowa Southern Minnesota weekly hog weights, 291.4 pounds. That's up from last week, from 290.7. It is significantly above year-ago levels. It's going to put more burden on this futures market. Even though the quarterly pig report is somewhat friendly, we have a lot bigger supplies with these weights coming in heavier. EIA report comes out later this morning. We'll update you on that. Have a great day, and hope you have a chance soon in RFD TV. I'll be making an appearance there, and also Rural Radio podcast this afternoon on Commodity Wrap. Have a great day, and we'll talk to you again soon.